If your business only makes money when you're online, you don't own a business, you own a job. I'm an accountant, I see the books, and today I'm showing you the 5 business models that actually build wealth. Stay until the end. Number 1 is where the stress drops, the noise disappears, and the real money starts, and almost nobody talks about it. Number 5 is where most people should start. Online service-based businesses. We're thinking consultants, agencies, freelancers, coaches, specialists. You're selling skill, experience, or problem solving, and it's the fastest way to generate cash with the lowest barrier to entry. No stock, no premises, no massive upfront costs. You can turn knowledge into income in weeks. When service businesses work, they work fast. Margins are high, cash flow is immediate, and you're not waiting months to get paid. That's why so many of my clients start here. It's how you stabilise income and create momentum. But here's the part people ignore. Most service businesses don't scale, they stretch. The owner becomes the bottleneck, the inbox becomes the business, and the income plateaus. If you stop working, the money stops. And if you run a brick and mortar business, a shop, a salon, gym, trade, hospitality, this matters even more. Physical businesses often run on tiny margins. But the moment you layer in a service, consulting, advice, training, retainers, margins can change overnight. Same customers, same knowledge, completely different profile. The clients I see win don't stay here forever. They productize what they do. They systemize delivery, they outsource execution, and they move themselves out of the day-to-day delivery. So number 5 is about creating income. Number 4 is where people stop selling hours and start selling units. So number 4 is e-commerce, physical products, digital products, subscription models. This is the first business model on this list where revenue is not tied to your calendar. You build something once and sell it repeatedly. No sales calls, no one-to-one delivery, no hard cap on time. Margins can scale and revenue can compound. But let's be honest, e-commerce is harder than services. You've got stock, cash tied up in inventory, returns, logistics, ad spend. You're swapping time risk for capital risk. Despite that, some of my most successful clients run e-commerce businesses because once it's dialed in, it's predictable. You know your margins, you know your cost per unit, you know what happens when you spend £1 on ads. That level of control is powerful. And if you already run a physical business, e-commerce is often the natural next step. Same products, same suppliers, just no longer limited to geography or footfall. So number 5 is selling skill. Number 4 is selling units. Number 3 is different again because now the product is not what you sell, the product is attention. Number 3 is where the business model shifts again because now you're not selling skill, you're not selling units, you're monetizing attention. Creator-led media businesses. And let's be really clear, this is not being an influencer. This is building a media business. If attention isn't converted into owned income, you don't have a business. You have risk. One of my clients makes about $4,000 a month streaming her gameplay on TikTok. That's purely platform income. No sponsors, no products, no funnel. Real money, but it's fragile. That income depends on an algorithm she doesn't control. If the platform changes, the income changes. That's why creators who stay at this stage stay stressed. So what can you do? And I'll use myself as an example here. My YouTube channel started as content, but it's now created multiple streams of income. Ad revenue, digital products, lead flow into the service business, brand trust I could never buy with ads. This is authority. The key distinction is YouTube doesn't replace my service business, it feeds it. It pre-qualifies clients, it builds trust at scale, and it creates income that doesn't rely on my time in the same way. The creators who win don't chase virality. They build ecosystems, attention at the top, products in the middle, and assets at the bottom. The money isn't in the platform, the money is in what you build around the platform. So number 5 is selling skill, number 4 is selling units, number 3 is monetizing attention, number 2 is where attention and cash flow start turning into something solid, and it is property investing, but not the way most people were taught. The traditional buy-to-let model is on life support. higher interest rates, Section 24, licensing, regulation. I see landlords with multiple properties making less money than they did 10 years ago and worrying a lot more as well. But the successful property investors haven't left property, they've changed the model. Short-term lets, serviced accommodation, we're talking Airbnb, Booking.com, corporate and contractor stays, the same bricks, completely different numbers. I've got a client making around 80 grand a year from a single property. One, not a portfolio, not 10 houses, one well-run serviced accommodation unit. And it's not magic and not doing anything dodgy, it's just a higher nightly rate, better occupancy and treating the property like a business, not a passive investment. Fewer properties, more income, more control. Is it hands off? No, but neither is dealing with voids, tenants and constant rule changes. The investors who win here use systems, cleaners, software and teams. They've swapped stress for structure. And this is why property still sits high on my list, not because it's easy, but because done the right way, it can outperform almost everything else. So number 5 is skill, number 4 is units, 3 is attention, 2 is property but evolved. And number one isn't about earning more, it's about keeping what you've already built. If you're watching this and thinking, I've got income coming in, but don't actually know how to extract it properly, this part matters, because making money is one thing, keeping it, structuring it and getting it out tax efficiently is a completely different game. This is exactly what we do every day. We don't just do compliance, we help business owners and investors structure income, property and growth so it actually works in real life. If you're an early stage business owner, start with the tax game plan. It's the foundation, how to pay yourself, how to structure income and what most people get wrong before they scale. The link for that is in the description below. And if you're already making money, whether that's from business, property or content, book a call with my team. We'll look at your setup and map out how to extract income properly, not just pay less tax. The links for those are below. So, number 1 is investing, personal and corporate, where wealth actually compounds. And investing is what happens when you stop needing to work for every pound you earn. Real investing starts with surplus, not hope, not desperation, surplus. Income pays for your life, investing is what you do with what's left. And this is where most people miss a huge opportunity, because where you invest from matters just as much as what you invest in. That's personal investing and there's corporate investing. The key difference is simple. Personal investing is done with post-income tax money. Corporate investing, a lot of my most successful clients invest through their companies. That money hasn't been taken out personally first, so you're not paying income tax or dividend tax just to invest. The company pays the corporation tax on its profits, then the capital is deployed inside the structure. That's it. That might be into other businesses, technology, AI, software, property-backed vehicles, gold, silver, crypto, stocks, currency, money working inside the structure that created it. One of my clients made around 30 grand in a year from silver. Bought inside a company, no operations, no stress, just capital positioned properly. The asset isn't the point, the allocation is what sits personally and what sits in the company, what compounds and what protects. That's wealth strategy. The mistake I see is people investing without structure. They buy assets in the wrong place. They extract money inefficiently. They create tax they didn't need to create. At this level, structure beats returns. This is why the order matters. You build income, you scale systems, you leverage attention, you evolve your assets if they're not making you money, and then you invest properly. Most people ask how to make more money. The people who win ask where their money should live. That's the difference between income and wealth. If this video made you realise something, it's probably this. Making money isn't the hard part. Structuring it properly is. Most people build income first and think about tax, extraction and investing later. That's backwards. Every example I've given you today, businesses, property, media, investing, works because the structure is right underneath it. Where income lands, how it's extracted, what's held personally, what's kept inside a company, those decisions compound just as much as the investments themselves. So if you're at the start, get the tax game plan, it's in the description below. And if you're already making money from business, property, content or investing, Book a call with my team. We'll look at your setup and map out how to extract and deploy your money properly, not just minimise your tax. Wealth isn't about earning more, it's about keeping more, moving it smarter and putting it to work in the right place. Links are below.